Great to have you here. I was very interested, in part because it's been so noteworthy how Match and Bumble have been really poor performers after great runs kind of during the lockdown pandemic times. And I did wonder what the market was suggesting about the long-term growth outlooks for this area. So what has been pressuring this group, and what are you suggesting could be a better outlook for them perhaps in coming years?
Absolutely. Thanks for having me. So there's two factors we think have weighed on these stocks. One is there has been some macro pressure, primarily on the a la carte revenue side, which is your one-off purchases. Saw a lot of softness when gas prices were at their peak. The second is this concern that the industry is over-monetized, oversaturated, mature. And that's what we really tried to address in this note today, which we don't think is the case. If you look over the past decade, the industry growth has really been driven by user growth. The rollout of these mobile products and the adoption of the simple subscription product, that was kind of the easy leg of growth, if you will. From here, we think it's more dependent on monetization. So monetizing those users that are still free, that haven't paid for anything, but also increasing the amount that the paying users are spending. That is going to, we think, fuel the leg of growth going forward. We still see a double-digit CAGR for the industry through 2030, so very much not mature in our view.
You make the analogy to what happened with video games, and just draw that out just briefly in terms of why you think this industry can resemble that.
Absolutely. So if you look at the video game industry, user growth has actually been slightly negative over the past decade, yet revenue in the industry is up over 230%. So we think it's a really interesting parallel for an industry where there hasn't been as much user growth as people probably expected or thought that would be necessary in order to drive the revenue growth that it's delivered, but has obviously still been a very successful industry, and the stocks in that space have obviously done quite well. So we think there's sort of a similar analogy here. Yes, user growth is important, but ultimately isn't the major driver or what you actually need for this business or these industries to be successful for the medium term.
Now, you do like Match Group. What is Match going to do to try and get, I guess, the average revenue per user, get people to pay for more attributes of the service?
Yeah, so Tinder's obviously had a little bit of a hiccup in terms of its growth rate. We think from here, it's really dependent on product innovation. So they brought an entirely new executive team there, primarily to drive better a la carte features, some product optimization, some pricing optimizations. We think that is going to fuel the second half revenue growth for this year. And then going forward, it's kind of about monetizing two different groups. We think Gen Z, the younger users that are aging in, who may not be as likely to sign up for a 30-day subscription, introducing something like a weekly subscription, which Bumble does, that might be easier to convert a user to do, or more a la carte features beyond just a super swipe. So one-off purchases that you can make that enhance your experience, but ultimately don't tie you down to an ongoing revenue commitment. And the other side of it is monetizing power users. So the top 1, 2, 3% of users who are willing to spend $50, $60, $70, $80 a month, we think, but don't really have the product set available to them today in order to do so. And so rolling out some of these more a la carte features that are about gamifying the experience a little bit more and provide incremental value when you do spend more over time.